Welcome back to Global LPG Conversations, Argus's podcast in which we cover global developments in LPG markets around the world. My name is David Appleton. I work for Argus in LPG, and I'm today joined by my colleague Peter Wilton again. Hi, Peter.
Hi, David.
Peter is the editor of our flagship LPG publication, Argus International LPG. And we have convened today to discuss what's going on in the market. And I think a few weeks ago, we probably weren't expecting to do this podcast, but there's been quite a lot going on in terms of price movements and the reasons behind that. So we're going to look broadly at the global situation, then zero a little bit in on the European side of things, with Pete being based in London and covering that market more in depth. So Pete, what's been going on?
So, well, from almost nowhere, really, we've suddenly seen 6-month highs in our Northwest European propane benchmark for large cargoes. These are cargoes delivered into Amsterdam, Rotterdam, Antwerp. So assessed value for these cargoes currently stands at around $720 a ton, and this is up from $550 as recently as the start of the year.
Right, and then so that's what we've been seeing in Europe, but obviously this is a global market we're talking about, and presumably there are global events behind this. So what are the underlying factors here?
Yeah. So as ever with Northwest European propane, we're buffeted, as you say, by global events in the wider oil market and global LPG trading conditions, as well as local factors. So yeah, as ever, this is not going to be a simple explanation, I'm afraid. But I'll start off with 3 external factors to our ARA market that's driving this big surge in prices. So first of all, you've got global crude prices. Crude is sort of the primary driver of propane value, and these prices have had a very bullish start to the year. North Sea dated crude, the local benchmark, that's up by about $5 a barrel to around 86.5 currently, and this was primarily supported by anticipated recovery in Chinese oil demand as COVID-19 restrictions are lifted over there. So this crude gain, it's about 6.5%. But the CIF-ARA gain I mentioned, as we kicked off, that's about 30% gain across the time frame. So clearly there's more going on than just a pretty boring story of bullish crude inflating propane value. We need, further factors. And a second, again, an external factor contributing to the bull run we're seeing is loading delays for cargoes in Houston and other US Gulf Coast export locations. This has been reducing product available to bring into Northwest Europe, and this has been due to a pretty exceptional fog season they're having over there in the region. Delays have affected well over 20 days now since November. This is up from just 11 days across the whole fog season the prior year. The third and final, and by far I think the most important external factor, external to the Northwest European market itself, is a recent spike we've seen in Asia Pacific LPG demand, where massive buying interest in January, firstly from China, has seen prices really fly there. So Chinese demand was very strong in early January, as lots of buying was crammed into a very short period. This was due to, first of all, disrupted operations in December due to large-scale COVID infections of the population over there. So this saw some late December demand, deferred into the early Jan market. But then also exacerbating this phenomenon was the typical spike we see in Chinese demand around this time of year, ahead of the Lunar New Year holidays in the second half of January. So basically, you had late December demand and late January demand all sort of crammed into this early January market. This caused prices to really spike and surge. And having seen this, the rest of the market, usual traders with shorts into winter heating buyers, or indeed the petrochemical market, they jumped into the buy side also, and this just amplified the peak. So the reason this is relevant to us in Northwest Europe is that Northwest Europe's a region that requires significant net inflows, and we must of course compete globally to pull in these tons. So the Asia Pacific strength, and it really was strong over there, very soon, i.e. immediately really, gets reflected in our market and our prices. LPG nowadays, for a very long time really, it's truly a globally traded commodity. You load your cargo on a ship in regions of net length, like the Mideast Gulf, of course, but also the US. And then you pointed at regions that are net short of product, and you pointed out the region that's offering you the greatest returns for doing so, net of your costs.
Right. That's a really excellent explanation, summary of the situation, Pete. And just to touch on Asia a bit more, we will look into this in more depth in a future podcast with our Singapore and Shanghai teams, because obviously this is to some extent an evolving situation. They've just had Lunar New Year there, so in principle there is a local change in the market conditions because of that. But definitely that's something that we'll explore in more depth with our team in Asia. But moving back to Europe, we've discussed the factors outside the market around crude, around fog, around Asia. But what's going on more locally? Because if I go back to December, and in fact, even early January, most of the people I was talking to were saying we've got lots of LPG. There hasn't been much of a winter yet, which has been problematic. So what's going on there?
So yeah, with regards to whether heating demand is playing a role, it's sort of yes and no at the moment. So true, it's very cold currently, and we're seeing below average temperatures across many of the key downstream heating markets that are served out of the ARA trading hub. But crucially, as you say, stocks were high late last year. They remain high, and there's two things in play causing that. First, that simply might be cold now, but temperatures across across winter have been consistently above average, bar some very sort of short cold snaps. But second, and I think more importantly, stocks prior to winter were topped up to the maximum extent possible, really. Suppliers, if we just go back to sort of the third quarter last year, suppliers were very worried about being able to secure tons in winter with potential EU sanctions looming for Russian LPG that haven't come to pass, but there was worries about that, and that would have severely impacted the market because Eastern European demand, a lot of that's satisfied from the east, from Russia, so that would have otherwise been supplied from ARA. So the local ARA guys were very concerned about this and topped up their stocks massively.
Right. And I guess the infamous, I guess now $700 per ton premium on FOB probably came into play there as well, didn't it?
Yeah. So concerns about seeing anything even approaching that sort of level we saw late in the heating season last year. Yeah, absolutely. That was in the forefront of people's minds. They wanted to be fully stocked before, before the mercury dropped.
Yeah, that makes sense in that we've got higher stocks and it hasn't really been the heating demand that's made a difference. That being the case, where is the buying coming from locally?
Yeah, so it's basically been increased propane intake into the petrochemical sector in Europe, namely the region's steam cracker operators. Demand's been very strong from them of late. For most of January, propane has enjoyed substantial discounts to the competing feedstock, naphtha, which was firm on some strong buying from the gasoline blending sector. So from the close of last year, the spread between these two, that is the propane discount, widened massively and was well above three figures on a dollar per ton basis within the very first days of this year. And this was a level we hadn't seen since before winter, really. So far, as we've sort of moved this conversation more locally, we've only been talking about one side of the market, right? We've been talking about demand. When a large contributor to the gains we've been seeing has been enduring weak local supply. LPG availability in the region, it remains still constrained as it was all of last year by the region's really sky-high natural gas prices, which have come down a lot. That's covered in sort of the wider media quite a bit, but they're still very, very high compared to sort of historical norms. And these highs, they trim LPG availability in two ways. First of all, gas producers leave LPG in the natural gas streams. For instance, Norwegian natural gas liquids production hit 3-month lows in December, as this was taking place upstream, and ship tracking data from Vortexa, it put Norwegian LPG exports in December at around 325,000 tons. This is down about a third year on year, and we're consistently seeing big drops. The second way the high natural gas prices affect LPG availability is trimming refinery supply. Simply refiners just burn LPG as a fuel rather than buy more expensive natural gas. So this weak local supply picture, which has been running for a long time now, basically means we're much more exposed than we used to be to factors elsewhere, such as this January Asia price spike. And yeah, what I'm sort of getting at here is my key point is that whilst the Asia Pacific demand side of the story is key to Sifara, that's basically what's driving it, we're more exposed to these effects due to the local factors, the local curb supply. Because now if you need an extra cargo in Europe, North Sea tons are much harder to find. So you've got to go out there and compete with other regions, namely Asia, for cargoes. So if they're paying up, you've got to pay up if you want the product.
Sure. Yeah. Yeah. This is definitely a new trend that we've seen over the past year, and I think that natural gas price is really kind of the key factor. Again, it's external, but it's something that's making a difference to the local market. Even to the point where I believe a couple of weeks ago there was a story in a local newspaper around the lack of LPG supply coming into one of the regions of Europe. And that when you're making kind of these more mainstream news outlets, that this is certainly becoming something worth paying attention to. Then I guess the question on everyone's mind is kind of like, what next? Now, of course, we have a consulting division who we will check in with for this podcast and other channels as well in terms of the kind of official Argus view. But if I can just pick your brain on your feel on what's going to happen next in terms of these prices and the situation.
Yeah, sure. I don't see the sort of numbers we're seeing now, the $700 per ton for large cargoes as being sustainable at all. So in Asia, and it is Asia that's sort of driving this, it's primarily buying into China's propane dehydrogenation sector. This is where propylene is produced from propane and only propane in single feedstock units. It was buying from that sector that drove the bull run that's such a big part of this story. And the rise in prices has put margins in the very same sector firmly in negative territory, with propylene prices below propane. So the business model, doesn't quite work. So that's got to lead to demand destruction in the east. And as I've been saying, we're so exposed to other regions. The weakness in the east will then, cascade to other markets, including ours. And then locally, as I mentioned, it's the steam cracker demand that's, the key prop on the buy side here, not heating demand, despite it being winter. Now, the former, demand from the former, is very flexible, but demand from the latter, is essentially inflexible. So again, we could see some demand destruction more locally as propane rather than propane being consumed as feedstock, naphtha is instead, and naphtha is looking quite long at the moment. So it's viable that will happen to a great extent, I think, and that's despite Russian naphtha being about to be subject to sanctions. So in addition to that, Northern Hemisphere winter, although heating's not a massive factor, it is obviously still a considerable offtake. With it being winter, it's just below average offtake. But Northern Hemisphere winter is about a couple of months from done really, and from being done, and stocks are high, as I've said. So I can't see heating demand coming back to drive prices upwards, if and when petrochemical consumption falls back. Currently, if you look at the forward curves for Sifara propane, it's steeply backwardated, i.e. Prompt value is far above the prices for months further out. Our spot price, as I've said, is north of 700, about 720 at the moment. But indications of swaps values for the summer months are down in the high 500s. You recall, at the start of this podcast, I mentioned that we opened the year at about that level, about $550 per ton. So perhaps this is as good as any point to conclude. The swaps market seem to indicate we'll be back there, or thereabouts before long.
Very interesting. Okay, so to summarize, a lot of potential indicators to see things going down, but of course, who knows what will be thrown at the market next. We've seen a lot of things change the picture pretty quickly. So I guess we should check in down the line and see how this plays out.
Yeah, absolutely. another update will be needed before long, I'm sure, on another podcast, because this January market, if it's shown anything really, it's that things remain very volatile and quite amazingly still driven in large part the dislocations of supply and demand from the effects of COVID-19, even 3 years after the pandemic began.
Right. Brilliant. Okay, thank you very much, Pete. That was really interesting. Thanks for your time again, and we'll talk again soon. Cheers.
Cheers, David. Thank you.